Welcome traders to this week's analysis of gold XAUUSD. My name is Vic. Thanks for joining me here. Now, the previous month of September has ended, and we have started a new month of October and new quarter as well. So it actually starts to make more sense to start looking at the higher time frames first. So what we'll do is we'll just hide this and we'll go to the monthly time frame. And if you have been following my analysis, then you know that we have been actually trading this W pattern here, and which actually formed, which reached its potential and then started to fall down. 1680 was the first profit target. We went for short from all the way to this level, then went for a long, and then we have been looking for a long, and from this level around here we have been looking for a short. So there was a time when, the market started to show us a more bearish signs, and we started to favor our short positions. And in the month of September, at the start of the month of September, I said the market was going to fill the wick of the previous month. So this was the August month, and this is the September. It started to fill the wick of the previous month. Now, if you pay attention to the current month, there has only been one working day in the current month. And what has this market done? The market has gone up, and it has got stuck into right this particular level here, which is right here. Okay, this is a very important level, which is right here, and the market has not been able to go beyond it. Usually what happens is, after this candlestick formation, we may get a little bit of bullish movement, but usually it again starts to fall back down until it reaches the full candlestick, like in a full wick. So I'm still expecting bearish movement on a longer term, but there can be few long opportunities as well, right? Because we can always trade long and short depending on the market opportunity. So this is on higher time frame, and it is on monthly time frame. It may take whole month, it may take weeks, or it may not happen also, because the market can change its direction, it can change its momentum during the month itself. But just by looking at the candlestick pattern, the month of October is also supposed to be a bearish candle. Okay, let's go to the weekly time frame. On weekly time frame, the market has done something very, very important here, and you need to pay attention to this level here. You see, the market has been actually, respecting this level quite a lot. One, two, three, four times. That means the market has, given a clear indication that, this is kind of like, strong resistance, as they, most of the retail traders say, this is strong resistance level. Actually, this is a liquidity zone. So what can happen is that, the market makers can push the price up and then collect all the liquidity and come back down. Okay, ultimately the momentum can still be bearish. Okay, but this movement can give us a good long trade. Other than that, we also have, remember, there is a gap available here around 1860 and 1880 level. So in this process, if the market makers decide to move this market upwards, then it can go all the way to this level and turn into a W pattern as well. And after that, this is going to fall again. So we have multiple ways of looking at it. So if the market gives you an opportunity to go long, you can do that. But remember, on higher time frame, which is a monthly time frame, this is still bearish, and you should still favor your short positions, right? At least you should be aware that there is a case where it can go and fall immediately, because you cannot just trade based on the gaps. The gaps may not get filled immediately. They can take months and months, and maybe probably years as well. Okay, so another structure, another way of looking at this structure is, look at this. A lot of traders will think that this is actually a head and shoulders pattern, but it is kind of not. And we need more data to be able to say that this is head and shoulders. And even if it is head and shoulders, then this will be the neckline of that head and shoulders. So if the market actually breaks through this neckline, where it's going to go to? It's going to go to the same level which we just saw, right? Because this is a W pattern. Okay, in our FCP methodology, we do not have head and shoulders. We simply have W and M patterns. Everything can be quantified using W and M patterns, but you cannot specifically quantify each and every leg of head and shoulders pattern. Okay, another thing that you must look at this is that this particular level is very, very important. So far, the market respected this. Never, there was no close below this. Now this time the market closed below, and it has come back to retest it. So what we should do is we should wait for some time to see if actually market starts to move above this or not. We get a confirmation above this or not. If we do, then only it will be a little safer to actually go for a long position. Until then, we still should be favoring our short positions. Until that happens, we should be favoring short positions, because we know that on monthly time frame the market can come down to fill that wick up, right? The one that we just saw, and 1680 can be one other one. Okay, so this is a liquidity zone. This is the gap that you should be monitoring. There's another level which you should be monitoring, is this: one time, two time, three times. Now again, it's the same kind of scenario. This is, as they say, this is strong support zone. Now, when you say something like a strong support zone, which is basically liquidity zone for market makers, so what they will do is they will try to break through this, collect all the stop losses, and then go back up. Okay, that's quite a possibility. So you should be monitoring this level, gap, and this level. These are very important levels for the price action. Okay, let's talk about smaller time frames now. So if I go to the daily time frame, what we have is that we still have an M pattern forming. Remember, in the previous analysis I mentioned that there was an M pattern and we were expecting market to come down to near about 1708 level, and that can still happen, because what is happening is, even though this was a good move to the upside, but this is still a correction. If you read this properly, do not just get too excited by one candle or two candles in one direction. Try to read the structure. So if you read the structure, what do you see? I see downward move, correction, downward move, correction, downward move, correction. What do you expect? If the momentum is still the same, then we expect a downward move. Okay, because the market can actually do that. So when does this become bullish? It can only become bullish if it actually goes beyond this, if it creates a new structure. Okay, so far it has not been able to do so. So from this point all the way to this level, if you find a good long opportunity, yeah, take it. Okay, that's fine, as long as it is fulfilling your trading plan. But if you want to just pay attention to the structure, and if you want to look at the proper um, market behavior, then this is still looking like a trend to the downside. Okay, another thing that you should be aware of is there is a trend line. Okay, this trend line has been supporting the price. So there have been few touches here, and the market is right there in one of the areas that we identified. So it is quite possible that market may actually go slightly upwards, or maybe up to this FCP zone, but then start to go down. So that's quite a possibility. So you have to be careful around this. If the market starts to go up, then you have to be careful. You should only go long, take huge long positions, and you will say the market, it has bottomed or whatever, as most of the analysts will say that gold has bottomed. No, it has not, because it has not created a new bullish structure so far. So far this is still bearish. Until you see a bullish structure, this is still bearish. Okay, so right now this is standing here. Now what I will do is I will take my Fibonacci and I will draw from top to the bottom here, and you will notice that it has come right into 38.2. So we have 38.2 with trend line and with another level that we identified. Remember this one, which has been strong level here, and that means we still have a chance that this market may go down. Okay, so, and yes, until you see a proper confirmation above this trend line and a retest and all that, and once you got a confirmation, then only go for a long trade, and beware of this particular point here, because once the market has gone above that, then only it will be bullish. So far it is still bearish. Okay, so that's it, my analysis. That's my analysis for this week. This was quite an in-depth analysis covering most of the perspective and most of the scenarios. Hope you enjoyed this. If you found this useful, make sure you hit the like button, share it with the traders, trading communities, and put in a comment. If you have any questions, ask. If you want to ask me anything about this analysis, put that in the comment section below this video, and I'll see you in the next one. Have a great trading week next week, and stay safe, trade well.